also in which also institutions utilize that ignorance of people against them, actually. So you come to realize that on the market, anytime you go to the market, um, anytime you go to the market, you always find the market moving. That's one thing, right? If it's currencies during the weeks, obviously they are always moving. Those synthetic pairs as well as crypto, those ones non-stop, they'll always be moving. So now the trick now is, are you able now to identify the current number one, the current market cycle which you are moving it? Are you, for example, those in the class, they are aware of what you call the three market cycles. The three market cycles are basically the three movements that you always find on the market. Three market cycles like this. These three market cycles, we have the swing push, whereby the market will be pushing in in a particular direction, right? Then after the swing push, you always have the swing pullback, whereby the market pulls back after it pushes. Then lastly, after the pullback, there's always the last cycle, which is called the swing continuation. So these three market cycles, they're always there. They're always there each and every single time on the market. These three. There's no fourth one or fifth one there. So they're always there, these three. So when you understand these three, whereby we have a push, a pullback, and a continuation like this, there are moments where, for example, let me just correct this. There are moments now where, for example, the market has been doing the swing push, continuation, swing push continuation. Then there are moments whereby the market wants to change the entire trend, right? That's where you have your change of character. I believe most people, they know all of that, right? Then it starts to do the opposite of what it was doing previously, right? So that, in as much as uh when it's briefly explained like that, it seems as easy as it might appear, but it's actually deep in the sense that there are those moments. So throughout those three market cycles, you also find different kinds of entries now, or different kinds of setups according to institutional understanding. For example, there are what you call A plus setups. A plus setups, this is a setup where the conditions or the confluences on that particular setup, the confluences, the confluences on that setup, let me just remove this. The confluences on that setup, the confluences on that setup, um, the confluences on that setup, there are many. Number one. Number two, you also find that an A plus setup, mostly, most of the times, it will be in alignment with the trend. So most of the times you discover that it will be in alignment with the order flow. So mostly the order flow, there will be an alignment there with the order flow, right? Whereby if the order flow is bearish, that particular setup, it will also be a bearish setup. So there will be an alignment with order flow. There will be also what else on an A plus setup. So mostly it's the issue of many confluences being on that setup. Many confluences, I'm referring to many conditions or many reasons why that setup will be valid for an entry at that particular point, right? So that's an A plus setup. Then you have your normal setups. Your normal setups, I can just call them B setups, right? These are your normal setups. A normal setup now, this one might not have as many confluences as an A plus setup, right? Most of the times, these ones, you find them as, mostly they can be uh continuous entries, whereby the trend is continuing where it was originally going. Mostly you can find them in the middle of a trend. You can find them in the middle of a trend. You can also find them anywhere along, so long. So the confluences, they're not as many as an A plus setup. Then last but not least, there are these, I call them strange setups, but they're not strange in the sense of being strange, but they are basically setups which many people, they are usually caught up with most of the times in those particular setups, in the sense that if you don't understand those setups on the market and you can't identify them on the market, most of the times institutions present those setups. They like to present those setups, and many people now, when they present those setups, many people, they can actually be confused because of that introduction of those setups. So these are what I call institutional decision-making moment setups. So it's like this, like that. That's the simple abbreviation that I can put there. Institutional decision-making moment setups. So these ones now, these are setups where there is a certain decision that must be made, whether to continue with the overall movement. For example, if ever we are pulling back, let's say here we're going up, then let's say this market pulls back to this extreme higher low. Let's say we're going up like this, okay. Then the market pulls back to this extreme higher low like this. Right here, there are two things that can happen here. Either this market is going to change the overall character like this, then obviously give you a pullback before a continuation to the downside, right? That's the first thing that can happen. Or this market will basically continue going up as it was doing. So you discover that there is a certain point there, a certain zone, a certain time there where that decision has to be made. It will be in that market structure that will be on that particular zone. So if that market structure on that particular zone changes or doesn't change, it is also a determining factor of whether we are going to continue where we were going originally or we're going to change overall. So those are it's just one example of an institutional decision making moment, but there are so many they come in different forms. They come in so many different forms. So I'll just go to the chart and show you the how to identify these three different setups on the market. This will help you. Number one, you minimize even losses on the markets. Number two, you also minimize drawdowns, unnecessary drawdowns on the market, because most of the unnecessary drawdowns that people are experiencing on the market is due to taking, either they are taking this, you discover that someone is busy taking these kind of setups and they are not aware. Someone maybe might be focusing more on this, which is not a problem, but how much even you risk on this particular different setups, it mustn't even be the same. I always tell people, if you want to get in aggressively on any entry, make sure that that trade setup is an A plus. You need to make sure and fully confirm that it's an A plus if you want to go aggressive on any particular. Most of you find yourself going aggressive on on this particular setup, which is a third type setup, which is not even a high probability setup. So these ones are always high probability, 90 to 95%, if not 99% of the times. These are high probability. Then these ones, they are not usually high probability, but they are just medium, normal probability. Then these ones, they are very low probability. Why are they low probability? Because the market is still here to make a certain decision. And before that decision is made, we can't make any solid concrete decision to say it's going to buy, it's going to sell. If you're saying it's going to buy, it's going to sell, it's because there your family show is an A plus setup. So let me just go quickly to the chart and show you some few examples of some of these things that I'm talking about, so that you see that it's something that is actually real and it exists on the chart. Once you are able to identify those three kinds of setups. Another thing also, this video, I'm not sure. I'm still thinking twice or thrice whether it's very wise for me to share it on YouTube, because it's something that is very, very, that I never wanted to really share publicly like this. That's why I'm still thinking twice or thrice whether to share it there on YouTube or just give the guys that are in the class only there, because of the value there. Because what I know, once one is able to differentiate between those three, there is no way you enter aggressively on an entry which is not an A plus, right? Once you know what an A plus setup is, right? And also, once you know what a normal setup is, it means there's also no way you are going to also enter aggressively on a normal. You just enter a normal risk there. For example, let me just give practical examples with what we are having on the chart right now. So, for example, this is boom 300. This is boom 300. On this boom 300, um, on this boom 300, I just want to show you where an A plus setup was presented, where a normal setup was presented, and where what you call an institutional decision-making moment setup was presented. So, so let me just go to the 4 hour. Let me see the 4 hour. 4 hour time frame. Right. This is the 4 hour time frame. I just want to present to you and show you where a normal setup was, where an A plus setup was, and where an institutional decision making moment was. So if you notice the trend of the 4 hour on the 4 hour here, right? If you notice here, the market was busy pushing to the upside like this, which is good. So as it was pushing to the upside, all of these, it was actually pushing bullish to the upside, right? Here, there, that's where they did a change to the upside, right? That's where they did a change to the upside. You realize that before they even got to change there, right? Before they got to change there, setups that you find below here, like if ever I'm going to enter any buy below that change, most of the times there will be normal basic setups because there's a certain decision there, which is a decision to the buy side, which has been made. Because so here they could have even done something like this, whereby they push here, then they continue going to the downside, right? So here, an A plus setup was going to be because here they were actually bearish. If you notice, let me remove this. They were actually bearish like that. Let me do this. Right, they were actually bearish. As they were bearish like that, as they were bearish like this, an A plus setup obviously was going to be a sell setup below this region, right? So here, an A plus setup was going to be a setup whereby they bounced there and came and induced here. There, they would have confirmed that they are going to drop right there. So here, if ever they had done something like this, came back here, this was going to be an A plus setup. The reason why it was going to be an A plus setup is simply because we are over, the order flow is bearish here. The order flow is bearish. Order flow being bearish, it means the momentum is to the downside. So if momentum is to the downside, then you get a setup like this on this particular zone, especially being this will be your lower high, right? So them doing something like this was going to be an A plus. So that being an A plus setup, those are moments where you can even go aggressive because number one, the order flow is on your side. Number two, um, the momentum is on your side. Number three, you are trading in the direction of the trend. Number four, the confirmation has been done that we're now going down, which is this one. This is a confirmation that we're now going down, of which never happened. It not happening there, it was a sign also that most probably we're going to change character to the upside there and start to continue buying. So you realize that all these setups that you're finding below there, they're not really A plus in the sense that there is a higher confirmation that has been made, hasn't been made there. Hasn't been made there according to the 4 hour time frame there. So you realize that they're just normal buy setups, normal buy setups that you could have simply caught by simply identifying normal structure, normal order flow, identifying your normal highs and lows, because there no adjustment was supposed to happen so long they haven't changed this character. If ever they were going to change this character, right? So it means if there's no adjustment that must happen, it means you are just identifying your normal highs and lows. Your normal highs and lows there, it means here I have this high, I have this high, I have this low, right? I have this high. Them coming back here, I can even buy here, put my stop loss below this low, right? They come, they break. That's a high, that's a low, that's a high. Them coming back here, I can even buy here, put my stop loss below this low, right? They came back again to the same, which was a buy again. They put back here. There, I could have even bought, put my stop loss below there, right? They went up, they came back down. Here, you could have bought, put your stop loss below this entire level, up, down. You could have bought here, put your stop loss below here. up, down. Here, you could have also identified a simple 15-minute shift on that particular level. Up until here, they came up, down like this. So you realize that there was no inducement that even happened as they were going up like that. There was no inducement that ever happened, which was no shift of the market, because had they induced, that would have been our lower high and would have gone down. But there was no inducement. So all of those were entries that you could have entered going to the upside. So those were just normal setups according to the 4 hour there. Then after doing this now, that's a decision that has been made that we're now the market, the momentum there is now strongly to the upside. So it means next time you will get and set a similar setup like that. The only difference is the zone where it was playing around. Previously, that those setups were playing around in a region where the sellers were still in charge. But now the buyers are in charge now because of this change that has happened. So this one now, instead of being a normal setup, it's no longer a normal one because it's now of a high probability in the sense that it's in alignment with order flow. Order flow is bullish, as well as here we are still bullish. We broke structure. We came to an extreme level. So there, that was also a very beautiful setup that you could have caught nicely and even held all the way up until they induced to the upside like that, up until they induced to the upside like this. There, that's when you could have came out, or you could have just waited for them after inducing to pull back to this level, then you come out. So this was a simple A plus setup. Them pulling back even to this region, which was a demand level there, right? They put back to a demand level, they've induced. Those are all confluences they've induced. Order flow is bullish. Those are all confluences that I'm talking about. Order flow being bullish, number one, they've induced. Number two, number three, they've tapped our extreme demand. Number four, they've also tapped a very sensitive Fibonacci region. Right. All of those are confluences that I'll be looking at, that I'll be considering. I'm looking at all those things before just jumping into the trade. You see, tapped into a very significant Fibonacci retracement level. So that one also was an A plus in the sense that it's in alignment with order flow, as well as all the confluences are supporting that entry there. That was also an A plus that you could have entered up until the induce or even up until that level. So along the way, they present normal setups as well. Normal setups are also setups that I always, those in the class, they are aware of the fact that once you know that here we are going up, this subinternal structure, it remains the same, right? So if it remains the same, if it remains, if it remains the same, doesn't change as we are going all the way to the upside. It means even if I get something like this, if I get this high and this low, I can buy here and put my stop loss below here. If I get this high and I get this low, I can buy here and put my stop loss below here. It went up, high, low. So all of those were opportunities that you can actually enter and scale in as they'll be going. Those are basic normal setups that were actually now presented along the way. This one also was just a normal setup that came along the way. These ones, normal setups that were now coming along the way. So these ones are setups, yes, the order flow, they are in alignment with order flow, but they're just normal in the sense that they're not really on a high probability zone per se. So if you go to lower time frames, it will be a very clear channel. So all of those retail channels is because they are in alignment with order flow. That's why they were being respected at that particular moment. So I'll just move and jump to a moment where there was a decision that one was let me see if I can identify. So here they induced, then they broke. After they broke, then they changed right here. Right. So them changing there, already there, a decision has been made. This is a decision that has been made. It's different from where they induce like this, they come and tap a level like that. There, they are still bullish, and you can't be finding yourself selling whilst they are still bullish like that, right? So, for example, here also, what I was telling you about, whereby you have a push, you have a pullback like this. Once they've pulled back like this, if you go to a lower time frame, you actually see the shift that happened there to confirm this, that is even going to go up, right? So here, this changing character like this is a decision that has been made in the sense that anyone who might have taken sales up there. So let's say, for example, here, I took sales based on a lower time frame inducement. Let's say I identify a lower time frame inducement up there. If I take those sales based on that, for example, there are the entries whereby before it induces your higher time frame, they actually induce on the lower time frames first, which is the M15. So once they induce on the M15 there, if I take any sell from up there, is it an A plus? It's not an A plus in the sense that the market overall structure is still what? Is still is still bullish, right? The market overall order flow is still bullish. So it's not an A plus, it's just a normal setup. It's just a normal setup, and it can also even be categorized under the institutional decision making moment setup, because there's a decision that has to be made. So even here, for example, here, so here when the market came here to this level, let's say above this level, you can't find yourself buying there because number one, they're at an extreme level. Yes, we can see, but you can't just buy because they're at an extreme level. So there's a decision that must be made there. In this case, this was the decision. So many people sometimes they can even come here and pretend to do a bounce here, and you discover that the structure on the lower time frames doesn't even shift; it remains the same, bearish. So many people they will be busy jumping into buys, but then the market eventually takes out like this because there was a decision that wanted to be made, which was what we call the institutional decision making moment, or the institutional decision making moment setup. So once the decision has been made like that, it has been made. So we now know that we are now bearish. We are now bearish. It means any sell that I'm going to enter is most likely going to be a, an A plus setup. So yeah, an A plus setup is going to be a setup that is going to have all the confluences they've induced. Number one. Number two, make sure they've tapped a level here. They've tapped a level. Right. They induced, they tapped a level. Beautiful. So all of those are confluences that I want to see for an A plus setup. They've induced, they've tapped my major level there. Up there, you realize that they tapped, the fair value gap had been tapped, and also other levels had been tapped there. So many levels had been tapped. That's why it never came all the way there. Even that order flow level to the upside, it had been tapped. That's why they never came all the way there. So there, that was also the A plus setup. There, all you can do, you can even go to a 15-minute time frame on that particular zone. You just shift and go to a 15-minute time frame. You actually see the market shift right there on that particular. That's an A plus where you can even go aggressively there. Same thing here. So here, them now pushing like this to the downside. We have a major level also to the downside, which we're anticipating them to take out, which is this major, major change of character. This one is a minor one, which is giving us these cells, but we know that all those cells must proceed up until we take out this one. So it means during that entire time, all the main cell setups that I'll identify, most of them, there will be A plus. For example, here, if I identify this, once I've seen this, then I realized we tapped a level like that. Then also, if you go to a lower time frame, you can actually see this other shift as well. This one was a high A plus setup, a very high A plus setup in the sense that the confirmations there were double. So many confirmations. We induced number one, beautiful. We tapped a supply, number two, beautiful. We also did a shift there, which was a visible shift there. They came into the zone. Instead of going up bullish, 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 then they did a shift there. That shift, that one was a very, very high A plus setup. Very high A plus setup in the sense that there you could have even gone extra aggressively, especially when they came back there. It's an A plus. All the conditions and everything is in alignment with whatever is happening there. It's an A plus. So it's an A plus like this. My stop loss is just above like that. Then my TP, you can put your TP there, or you can even extend the trade up until where they are going to do their next inducement. If they don't induce, it's also good because you will target this major level to the downside. You see? And if ever you really, so you discover that along the way as they were coming down, they were presenting other normal normal setups like this one, whereby they come and break a channel. This channel is just that's just a normal. It's a normal setup in the sense that it's in alignment with the order flow, yes. But is it at the initial where the initial move began? Is it there? It's not even there. So it's just a normal setup. Even these other setups whereby the this internal structure, it has to remain the same, whereby the highs and the lows have to remain the same here. That's a low, that's a high, lower high, lower low, lower high, lower low. So here, even here I could have even entered a sell here. This was a sell, a normal one, in the sense that the move has already begun up there. A normal one in the sense that also order flow or those lows and highs must be maintained up until we take out this leg and create a new leg. So this one was also a normal one that you could have also held and entered from there like this. Very, very simple, very, very simple like that. So you realize that each and every single time the market will present those three kinds of moments, which it will take time, obviously, for one to fully understand them, fully. For example, here I can also give you an example. Remember, they kept on being bearish. This bearish momentum, it was just that bearish momentum that you saw from the upside that was still being maintained up until here. So here, they were not just maintaining bearish momentum, right? Bearish momentum here, they came and they induced. After they induced, they came, they broke structure here. Order flow was still bearish. So order flow being still bearish, still being bearish, them coming to an extreme supply like that, right? If you go to a lower time frame, 15-minute, you will actually see the shift there, making that an A plus setup as well. Order flow is bearish. We are at an extreme and we are taking sales. That's an A plus setup. So there, that was also an A plus setup as well there. Here, this buy, if ever someone took buys, counter buys, maybe if ever you you took counter buys, whether from there or even from here, based on a lower time frame inducement like this, if ever you took these buys, are they an A plus setup? Not really. They don't fall under the A plus because they are not in alignment with order flow. They are a counter trade, so they basically fall under a normal. They're basically normal. Even someone who maybe might have also introduced this, that's a normal setup. It's not really. It doesn't fall under an A plus. Introduced this whereby after the breakout you entered more buys and all that. It's not really an A plus high probability setup per se. This one was also a normal setup whereby after they do this, you know that they definitely have to keep on dropping up until they take out this leg. So even the breakout there, it was also a normal setup that you could have also entered more sales there. So right now, when they came to induce again, where was their other inducement? It was here. Uh, right. So they came and induced here. Them inducing here, remember, order flow is still bearish. So if someone takes buys based on the lower time frame inducement, if you go to 15-minute, you actually realize that you could have actually gotten an inducement there. So that lower time frame inducement could have actually given you this bias to this inducement. Then you just follow up until they induce this this H4 legs like that to the downside. So here someone could have taken normal bias to the upside, but these buys, they are still normal setups. They still fall under the normal setups and also fall under the institutional decision making moment setup. So even let me show you another practical. Right, this one was a practical example of an institutional decision making moment in the sense that even after they induce here, if they induce here, obviously the lot of times they've induced earlier, which you could have caught buys to the downs from the downside there. So you catching those buys from the downside, the market is still bearish. As it is still bearish, this was a decision that needed to be made for us to confirm the buys as fully being dominant on the market. So now it means by the time they get to this point, this is a zone where the sales, both the sales and the buys, they need confirmation for them to be taken there. The sales, you need confirmation to change, to induce to the downside here. They must induce for them to make this an A plus setup. If they don't do that, also the buys also, they need also confirmation to change this character as well. Because if they don't change there, they can still play around like this, play around, and eventually you might discover that they do this at the end of the day. That's why it's a very that's an institutional decision making moment that one has to wait for the market because it's close to the change of character level. And they once they've changed the character like this now, there the decision has been made. We now know that the buyers are in control. It means now the my buyers are going to be more in control than my sales. So them even inducing there, right? Me taking sales which are counter sell to the downside, obviously to this extreme level. I'm taking these sales as normal. Those are just normal setups. That's a normal setup that you could have taken. into this level, obviously, because it's a counter trend, right? That was a normal setup. Then them doing this to the upside, doing this change here to the upside within our overall upside movement, doing this. That was a confirmation that we're now going up. Them pulling back again to this extreme level. They were now presenting an A plus setup here. An A plus setup. When they came back into this 78.6 region, put back into the 78.6 region, that was an A plus setup, buy setup now. That was an A plus buy setup that they presented. Even here, this was an A plus. The only difference was that it never went all the way, but it was actually an A plus where you could have even gone aggressively here. Even if they came here, you could have still made money there. They came down again. They never broke our major structure, so they are still within the overall bullish movement. So here, them changing like this or inducing like this within our overall bullish movement to the upside, this was now a presentation of an A plus setup again. This A plus setup, it was now confirmed here. This confirmation, it gave us this A plus first setup here. This was an aggressive entry zone. You could have entered aggressively there. Your TP still all the way up there, even if it didn't come out. Even by the time it gets here, if you entered aggressively there, that's a lot of money that even you'll be shaking and wanting to come out even by the time it gets there. They came back again to the same high probability level. You enter again there, the confirmation has been done already. You don't need another confirmation. The confirmation is here, which has been done already. So those were all A plus setups, A plus there. All these ones before confirmation are simply normal setups, and others they fall under the institutional decision-making moment setups. So even here where the market is currently, that sell that I gave you, it was an A plus setup in the sense that a decision had been made there. A decision had been made. Here, what decision had been made? If you go to to the 1 hour time frame, it's much more clearer. A decision has been made. They change character to the downside. It's a decision that has been made. It's different from the sales that you take before the change of character has been made. So all these sales that you find maybe before the change of character. So here, you find that that's a simple, clear inducement to the downside. So they are still bearish. They induce to the upside. This was a higher low. So this being a higher low like this, them coming to take it out now, it's a decision that has been made. We have confirmed that we have taken it out. So us taking it out, we have also confirmed that this is now my lower high. This now being our lower high, it's a decision that has been made, meaning when we pull back to an extreme level like what they did, this was an extreme level, an extreme unmitigated level. They could have even gone aggressively. You know that this lower high is never going to be taken out. So this is a decision that has been made, of which our first major TP is this one. Obviously, I'm anticipating it to keep on going down. So after doing that, they can even give you a pullback and all that and all that. But that entry up there was a high probability entry. Right. So guys, I think I'll expand more on this in the mentorship class as I'll give them more information about this. But this is basically some of the things to do with these three kinds of entries on the market.